Today we're talking about the Federal Reserve raising interest rates earlier this week. Now joining us is KTNV financial analyst Steve Budin to tell us what is going on here. Steve, thank you so much for being with us.
Good morning, and I apologize for my scratchy voice today.
That's okay. We're all experiencing some allergy side effects here.
Yeah.
So tell us, at a time when we're dealing with all the rising housing costs, consumer costs, just everything is going up, why did they raise the interest rates now?
So the Federal Reserve is our nation's central bank, and they're responsible for keeping our economy moving forward at a decent pace. When they see prices go up as quickly as they have, what they try to do is raise the level of interest rates or borrowing costs in the theory of slowing the economy down. If the economy slows down because it's too expensive to borrow, the theory is if there's not as much economic activity going on, prices will drop because the demand for those products will go down. In theory and reality, I think sometimes they're two different things.
Tell us the reality of this. Does this work? What are the pros and cons to it?
On the con, let's start with the negative. So when interest rates go up, borrowing costs go up. So anybody who has a credit card, anybody who's buying a new home, mortgage rates just went over 4%. Anybody looking to buy a new car, all of those interest rates are going to go up. So the cost of borrowing goes up. And the theory is, again, people will not borrow as much, and that'll slow the economy down. Now, on the positive side, many of us who are savers should see our savings rates begin to go up. Now, money market rates and savings accounts rates sometimes lag, and they may come up a little slower than the normal borrowing cost rate. But I'm seeing in the bond market, anybody looking to invest in bonds, for example, the fixed rate of return has been going up. So that's one minor positive.
So what can we expect for the future? Will they lower it again if things stabilize? And how often do they actually raise rates when this happens?
Yeah, they raise and lower rates as the economy and the news dictate. They did come out yesterday in their press conference and said they could be raising rates another few times. Now, whether or not they do that will depend on how quickly or slowly the economy reacts to this first interest rate raise. I'm thinking they'll probably raise it at least 2 more times, but we'll see what happens, and we'll report on it as we go. But don't be surprised when you open your next credit card statement that the interest rate went up.
Last question. Do you have any advice for us out there now that these rates are going to be higher? What should we do to combat them in our own personal finances?
Yeah, I think anybody who has some outstanding debt, that's what's called variable. So if you have a fixed rate mortgage, your rate is locked in. But anybody who has credit card debt that is going up, you should try to pay that down quicker because it'll save you in the long run on interest payments.
Things are only going to get more expensive. Steve Budin, thank you so much for being here with us today.
You're welcome.